Hello. The purpose of this video is to help you guys understand how to kind of report unemployment income if you are applying for a loan modification, repayment plan, short sale, or deed in lieu with the bank. Unemployment income does count as income, right? The banks do look at that. It's not the best type of income to report if you're trying to keep your home and show the bank that you have stable income coming in. So if you have unemployment income and you're very early in your specific foreclosure timeline, and you know you're going back to work in a way where you'll start receiving either, W-2 pay stubs or profit and loss income, if you're in that mode, you might want to decide whether you should wait to apply until you get out of the unemployment income phase, or whether you need to apply with unemployment income. The reason being, unemployment income, after a certain amount of time often goes away. It's not viewed as one of the most stable forms of income. While it does count and you can report it if that's your only option, you should have a good understanding of where you are in the foreclosure timeline and whether or not you should use that when applying for a loan modification. So unemployment income gets deposited into people's bank accounts usually. So typically the way unemployment income is working, especially right now with COVID going on, is, you apply online, you send in all your documentation, and then at some point if you get approved, your state just starts depositing the unemployment income into your bank account. Not all states are like this. This is just general information, but typically that's what I'm seeing, at least here in Washington State, is these deposits are just coming into the bank account. So in order to show the bank that you have this type of income coming in and that it is stable income coming in, you really do have to explain to them what's going on. So if you want to use unemployment income on your application for some sort of loss mitigation, number one, you should write a letter and tell the bank that you're receiving unemployment income. The letter should say, I am receiving unemployment income. Then you should tell them the amount. I'm receiving whatever, $600 a month in unemployment income. Then what you want to do is actually go onto your bank statements where the deposits are coming in and actually highlight the bank statements so that the lender that you're applying for can see where those deposits come in. And you'll want to tell the bank the frequency that they're coming in. So basically, unlike old times where the unemployment agencies used to give you like a very structured award letter that would have your name on it and it would tell you what you're receiving and for how long, because everybody in the country pretty much in some way right now is needing to apply for unemployment because, we're in a pandemic. The agencies have kind of relaxed how they're presenting that information. And so it is kind of up to you to understand, how am I getting this and how am I going to prove this? And so typically it is going into your bank statements, highlighting the deposits for the bank, and then supplementing that with a letter of explanation. Thanks.